Litecoin is sitting at $45 right now, and quietly, the on-chain data is building a case that most people are going to miss entirely. Here's the thing about LTC at this price level. Nobody's excited about it. Nobody's making YouTube thumbnails with Lambos and Litecoin logos anymore. The Reddit threads have gone quiet. And in crypto, that kind of silence, that's usually when the chart does something that catches everyone completely off guard. The crowd's disinterest is actually one of the most interesting signals on the board right now. Let me explain what's actually happening beneath the surface, because the price chart alone doesn't tell you the full story. Over the past 30 days, Litecoin's network has seen a steady uptick in transaction volume. Not explosive, but consistent. On-chain accumulation addresses, meaning wallets that are only buying and not selling, have been quietly stacking. That's not retail. Retail chases pumps. That's patient money positioning before a move, not after one. And we're also seeing Bitcoin dominance starting to wobble at resistance levels it struggled to break through before. Historically, when BTC dominance stalls and starts to roll over, that's the trigger for capital to bleed into the alt market. Litecoin, being one of the oldest and most liquid alts out there, tends to be one of the first beneficiaries when that rotation starts. Now let's talk about what Litecoin actually is, because if you're going to put capital into something, you need to understand what you're buying beyond just a ticker symbol. Litecoin launched in 2011, making it one of the original Bitcoin alternatives. The way to think about it is this. If Bitcoin is digital gold, the narrative Litecoin has always tried to own is digital silver. Faster transactions, lower fees, a proven track record of never being hacked, never going down. In the world of Layer 1 blockchains where new chains launch every 6 months promising to revolutionize everything, Litecoin's pitch is almost the opposite. Boring reliability. It processes transactions roughly 4 times faster than Bitcoin and has never had a serious security incident across 15 years of operation. That's not nothing. Litecoin also completed its most recent halving in August 2023, cutting block rewards from 12.5 LTC to 6.25 LTC. Halvings matter because they reduce the rate of new supply hitting the market. The price doesn't always react immediately. In fact, LTC's price actually dipped after that halving, which frustrated a lot of holders. But historically, the real price discovery tends to happen 12 to 18 months after the supply shock, when the reduced issuance meets a demand environment that hasn't adjusted yet. We are now well past that window, and the demand side of this equation is starting to show signs of life. If this breakdown is helping you think more clearly about your portfolio, subscribe to Crypto Sayans. We break down moves like this before they go mainstream. So what are the actual price targets for LTC in 2026? Let's be honest and specific, because vague predictions help nobody. The conservative case. If Bitcoin holds above $80,000 and the broader market stays constructive but not euphoric, Litecoin at $120 to $140 by end of 2026 is a realistic and well-supported target. That's roughly a 2.7x from current levels. Not glamorous, but it's based on prior cycle behavior adjusted for the current supply dynamics. The base case, a genuine alt season kicks in during Q3 or Q4 of 2026, Bitcoin pushes into new highs, and Litecoin reclaims the kind of narrative attention it had in previous cycles. In that environment, $180 to $220 is absolutely on the table. We've seen LTC run from $40 levels to well above $300 before. The infrastructure hasn't weakened. The argument that it can't do it again is mostly sentiment, not fundamentals. The bull case. This is the scenario where institutional crypto products expand further, Bitcoin ETF flows continue to broaden retail participation, and the market enters full euphoria mode. In that environment, $250 or higher is not a crazy number. It requires everything to go right, but it's not fabricated out of thin air either. One more institutional angle worth watching. PayPal, which already supports Litecoin for payments in multiple regions, has been quietly expanding crypto checkout infrastructure through 2026. More merchant adoption means more real utility demand, not just speculative demand. That's the kind of organic growth that tends to show up in price after a lag. Now let's talk about the risk. because anyone who skips this part is setting themselves up to get wrecked. The bear case for Litecoin is real, and you need to hear it. LTC has consistently lost market cap dominance over the past 3 years. Every cycle, newer and faster chains eat a larger piece of the smart contract and payments narrative. Solana does what Litecoin does, arguably faster, with more ecosystem development. Ethereum Layer 2s have addressed the fee problem that used to make Litecoin attractive. The narrative risk here is not just price. It's the risk that Litecoin becomes increasingly irrelevant as the space matures, and that $45 turns out to be the range it lives in indefinitely rather than a launching pad. If Bitcoin drops back towards $60,000 or lower due to macro pressure, rate uncertainty, liquidity tightening, regulatory shocks, LTC will not hold up. It'll bleed, probably harder than Bitcoin does, because low-sentiment alts always take more damage in risk-off environments. A $25 to $28 LTC is entirely possible in a bad macro quarter. That's a 40% drawdown from here. Know that going in. So what's the actual verdict? Here's my take. At $45, Litecoin is not a buy and ignore position. It's a trade with a thesis, and the thesis is alt season rotation, post-halving supply dynamics, and Bitcoin-led momentum. If those three things materialize, LTC outperforms expectations the way it always does when nobody's watching. If they don't materialize by Q4 2026, you need a hard stop in your head because the downside is real. For your portfolio, this is a position size conversation. LTC at $45 with a target of $180 and a stop below $30 is a compelling risk-reward setup for someone with high risk tolerance. It's not a core holding, it's a calculated asymmetric bet on the oldest alt still standing. The crowd has written Litecoin off before, multiple times, and multiple times, that's been exactly the wrong time to do it. Subscribe to Crypto Sayans. We break down the top coins every week so you never miss a move like this. Hit the bell so YouTube actually shows you the videos when they drop.